Thank you. Good afternoon, everyone, and thank you for joining us. My name is Florence Aretz. I'm an investment director at Schibsted, and I'm joined by Yoram Wijngaarde from Dealroom.co. And today, and for the next 40 minutes, we're going to talk about how consumers' behaviors have reshaped the marketplace's landscape. I'm just going to start by saying a few words about Schibsted, for those who may not be familiar with us. Schibsted is a global leader in online marketplaces. You might be familiar with some of our brands, such as Spock in Germany, Le Bon Coin in France, or Segunda Mano in Mexico. We span across over 20 countries, and we reach over 200 million users every month. My team, New Models, an investment team for Schibsted, was set up a year ago. We take minority stakes in early-stage companies within our core verticals, which are real estate, cars and mobility, and jobs and education. My team was set up with one strong idea. The idea is that as an industrial investor, we can contribute much more than financial resources to our portfolio of companies. And so, just like 10 years ago, when my company invested and scaled online classified at the time, we keep on looking for passionate founders and help them scale beyond their home markets. Schibsted and Dealroom are about to publish a report on marketplaces in the next 2 weeks. So I'm very happy to introduce you to Yoram. Yoram, do you want to say a few words about Dealroom and about the report itself?
Yes, sure, thanks. We're going to release a report together with Schibsted in 2 weeks about marketplaces. We're going to talk about, or write actually, about the kind of the evolution from simple marketplaces to more integrated marketplaces, and we're going to actually talk about this evolution in the next 40 minutes. But apart from that, we're also then going to review kind of the European consumer. So European household, how do they spend their money? Like a lot of it goes to food, basically housing, and this is all, and mobility, of course, and this is all drastically changing. So we're reviewing that, and then also looking into investment. So where is venture capital money going into? What is private equity doing? There's also a lot of corporate investment coming from Asia and Europe. So where is that going? And in the end of the report, we're also reviewing a lot of the new generation of companies, so companies to watch. So if you want to see this report, it will be free. If you sign up to dealroom.co, you will get it in your inbox. And otherwise, just keep an eye on it, and you can read more about it.
Great. So maybe let's start. Do you want to keep the clicker?
Yes.
Let's maybe start with the bigger picture. So how have marketplaces evolved in the past 10 years? What have you seen?
Right. So marketplaces kind of started with what you can say is supply aggregators. And they're still, of course, around. And this now has been kind of consolidated into a handful of companies. And Schibsted is probably one of the biggest. Others are companies like Axel Springer, OLX, Rightmove. And when we say they are kind of supply aggregators, it means the supply has always been there. People need to sell their house. People need to sell their car. They are moving. They want to sell their furniture. What these companies have done is to basically aggregate the supply, make it available online. And this has become a very profitable business, and each of these businesses are valued around 5 billion. Schibsted is valued, I think, around 7 or 8 billion. But what happened after that is you saw the emergence of vertical marketplaces. So marketplaces that went after a more specific segment, actually usually a smaller market, but were able to create more value out of a smaller market, which seems counterintuitive. So Airbnb is estimated to be worth now 25 billion. Booking is the ultimate example of that and is worth now almost $100 billion. But if there are many more, so you have Farfetch, Just Eat, there are also companies that are worth already several billions. Then the next generation, so starting from 2010, are kind of the on-demand and location-based business models. So they, of course, were enabled by mobile technology, and they're even able to have a more closer relationship with the customer and getting to an even higher market, even though they went after a smaller market. So Uber, for example, the market they went after is in theory smaller than that of Booking.com. But yeah, they're going to IPO this year. The valuation is not exactly clear, but it's probably going to be in the same ballpark as Booking.com. And then in the kind of the next generation of models could be in iBuying or AI, but we'll talk about that in a moment. So anyway, the trend has been going after smaller markets, and this has been called like the unbundling. Some of you may be familiar with this part on the left, and this unbundling is still continuing to this day, going after smaller markets, but creating more value, but being more efficient in being the supply and demand platform.
Okay, so we've seen the emergence of those big global vertical players, and it seems that it's all about reducing friction more and more. So could we like pause a minute on this idea of convenience? What does it actually entail? What do we see, and what do people want?
Right, so the consumer is more and more kind of taking for granted that they don't have to browse through products that they don't need. They want a high quality experience. So kind of the Craigslist model is not anymore of this time. People don't want to deal with strangers in their house. They also care about their safety. They're used to just opening an app or opening a website and getting almost straight to the product that they were looking for. The product needs to kind of know who they are and what they're looking for, and what they want to just be able to buy it with a few clicks. And by doing that, you can also create much more value in the marketplace. Okay.
So what do you feel are the sort of must-haves today for marketplaces?
Yeah, the must-have is exactly that. So frictionless experience. You will need to be able to purchase online. The app needs to know what you're looking for, and you don't want to spend the time on searching.
So you have a couple of examples, I think, on those.
Yeah. So how do you get to that point actually? So you can kind of break it down in these 4 categories, because as a marketplace, to be able to bring this frictionless experience that consumers need, you need to take a greater ownership of the transaction. So going from kind of the classifieds model where you own the listing but you don't own the transaction, to be able to go into a new market, you need to also take ownership of that transaction. So an example is Booking, where you book the hotel online, you make the payment online. The same with Just Eat. So Just Eat is an aggregator of supply, and you can order pizza, Chinese, and you pay online, and then it's up to the restaurant to basically do the delivery and bring the food to your home. So this transactional marketplaces model has been successful in travel, in delivery, and also in the gigs economy and Airbnb, of course. But then to go kind of to the next frontier, if you want to go into the next market, you need a full stack marketplace. And it's interesting to compare, for example, Deliveroo, which is a full stack marketplace, with Just Eat. So what Deliveroo does is, it's not just pizza, it's not just Chinese food, but you can actually order from your favorite restaurant. But to be able to deliver, this restaurant has never dealt with delivery. They didn't think of themselves as a delivery restaurant. So Deliveroo does all that for them. So they also take care of all the logistics. So it enabled them to expand the market or go into an entirely new market. Same with Farfetch, where they were able to go into the luxury market. These luxury brands were not comfortable with, they were not an e-commerce business. They were not able to do that. They also didn't want to just throw their high quality, luxury goods onto a platform like ASOS where it might get discounted and they don't have control over it. So they still want to do it themselves. They still want to be the seller, but they don't know how actually to do that. So Farfetch takes care of all of that. So that's like a full stack marketplace. And that's also been successful for Uber, for example. And then, possibly the next frontier is, again, categories like homes and cars, where you have second-hand goods. So how are you gonna, how are you gonna expand in that market and become a transactional marketplace with second-hand goods? Because no one is gonna just buy a second-hand car online. So the new innovation there by Auto1, for example, was to actually buy the inventory themselves. So you can sell your car within a day. So the seller actually doesn't have any more the product on their balance sheet. They get rid of it. And that's a way so that's kind of the final step in taking ownership of the transaction.
So in other words, we started from delivery services like Just Eat. So it's a given that people want convenience and want things to come to them. Then we see players like Farfetch and Deliveroo that are unlocking greater value from what you said by addressing different segments of the market. But no, what's interesting, what you're pointing at, is that this is applied to like many more categories and even more expensive types of goods. Yeah. So can we in any way generalize what the key success factors can be in these marketplaces? I mean, we're going to repeat something that has been said this morning. So if you attended the very first presentation, what comes next is very familiar, but I think it will resonate.
Yeah. So I will go there in a second. So if you talk about taking greater transaction ownership, what you also see is that the marketplace charges a higher commission, of course. So if you go from classifieds, where effectively the commission as a percentage of GMV is less than 1%, the typical transactional marketplace charges around 10-15%. So eBay is around 10%, Airbnb is around 15%, Just Eat also 15%-ish is their take rate. In some new markets it's maybe 10, but in that range. Whereas Deliveroo charges 40%. So a lot of that reflects also them taking more risk, having higher costs. They have to pay their riders. So more commission isn't necessarily better, but it's a reflection of having greater ownership of the transaction. But then if you look within the same type of marketplace, you can see that Booking can charge a higher commission, which is really a reflection of having more market power, which is probably because the supply is so fragmented. And also in the travel business, you have companies like eDreams, Skyscanner that can only charge a few percent commission, because the supply there isn't fragmented; it's actually very concentrated. Now, another really big factor in why some marketplaces are much more valuable than others has to do with the customer lifetime value. This is probably, I have also actually seen this slide or a variation of it 1 or 2 times. So it shows order frequency and order value. I have first seen it this way by Fabrice Grinda, who is a marketplace angel investor. But it really explains really well why this handyman model and wellness and beauty is so challenging, because there is just not enough frequency and the order value is low. So you really want to be as much possible kind of in the top right. And then what you were kind of alluding to is this next slide. So yeah, Bill Gurley, for those of you who don't know, is an investor at Benchmark, and he invested not only in Uber, but in a ton of other marketplaces. And why reinvent the wheel if very smart people have already built a framework? But I have also seen kind of variations of this today in a previous presentation.
So could you maybe comment on maybe the number 1 or number 3, and how it's changing to this landscape? Because some of these are pretty structural factors, like network effects were key to our success 10 years ago. What else do you see, or what have you seen more recently?
Yeah, absolutely. So, like you say, like things like network effects, they need to be present, and maybe 10 years ago that was enough. It's no longer enough, and I think the key factor, if you look at why do some marketplaces, they reach like they peak at 100 million value, while others they just continue growing. I think a lot of it has to do with number 1. It's really creating a wow user experience. And when I say user experience, it's not about having a slick app or that it looks nice or that even that it's frictionless is important, but that's not enough. You need nowadays to break through a market, you need to kind of create an experience that didn't exist before. Users didn't know it was possible. So Uber is the perfect example where it's really literally a press of a button. You see the car coming on your app. That was like a totally new experience back then. Another example is Deliveroo, where you can order like high quality restaurant food coming to your house. That option didn't exist anymore. So it's really about creating a new option that didn't exist. The last great example of number 1 is also Auto1 Group, where you can sell your car in a day. That is a totally new user experience. So it's more than the way the app looks. It's really creating an option that didn't exist before. And another one out of these that I want to highlight is technology unlocking value. So that actually could mean that AI can become a really powerful force in marketplaces, in creating a better match between supply and demand.
So maybe let's try and set back a little bit. So we're familiar with the likes of Uber, with food delivery. These are very popular sectors. Where is investors' money actually going at the moment?
This chart basically tells the story. So a lot of money is going into mobility and food tech. So why is that? And because it's here put side by side, it looks like home marketplaces, real estate marketplaces don't receive a lot of investment, but of course they still do. You still see a 2.6 billion number. But the reason that mobility and food tech is so much higher is really driven by just a handful of companies. So Uber has continued to raise lots and lots of money. Then you have, of course, their competitors in Asia that have raised almost as much. In food delivery also, a lot of that 9 billion is driven by capital that's been raised in Asia. So those two markets are expected to really undergo a major change. And in the report, we'll talk about more kind of the consumer trends behind that. But this basically answers it.
So shall we drill a little bit into two verticals that are close to our heart, I was going to say. Maybe let's start with real estate. What have you seen? What are the new models appearing in real estate?
Right. So there are kind of 4 key areas that are today interesting to talk about. So the first one is iBuying, and the most famous player there is Opendoor. I don't know if how many of you are familiar with what Opendoor does?
Some.
So still worth going into it a little bit. Basically, what they do is, so this is a US company that has raised already hundreds of millions in capital. They buy your house. If you want to sell your house, sorry? Auto One model, yeah, exactly. Yeah, is this the same model as Auto One? They buy your house, they refurbish it themselves, they put it on the market, and they sell it. But it's off your balance sheet, let's say, as a consumer in no time. So again, totally new experience. They are able to do that by having lots and lots of data. They, of course, also brag about their AI capabilities and whatnot. But in essence, having lots of scale in this market is an advantage and enables you, to know where you can buy. Of course, we talked about that yesterday, that homes and cars is not the same thing. Like with cars, you have certain models, you have a mileage. It's kind of quantifiable, whereas every home, in a way, is unique. So there's first, from what I understood, actually from you, going after areas where real estate is relatively kind of homogeneous, so you can predict the price. But that's a big new innovation, and that could be huge, because homes is the #1 expenditure for consumers. So imagine if that can be unlocked by a marketplace and getting, earning a commission on each transaction, that can be massive. And as a result, multiple have been investing in it. And one of them is actually Coded, where Schibsted has made an investment. So it's very promising. Then you have kind of the traditional home search. So companies like Zoopla, Rightmove. Yeah, it's not really it's kind of a mature industry, but you still see a lot of private equity investing. Just 2 days ago, General Atlantic invested in a property finder in Dubai. Online brokers is really interesting. So Purple Bricks is one big name. And how many people know Purple Bricks? A bit more. Basically it's a way to sell your house, but it's sold through an agent. But these agents are also recruited online. So it also kind of addresses the mismatch in the job market. By finding people who can work from home as a real estate agent and work at a much lower commission. So I think they charge like a fixed fee, and so the consumer can save money on real estate fees. And then the last interesting category, which is still quite small and early, is new ownership models. So you see in a lot of cities that first-time homeowners, they cannot afford to buy a house. So you see now some business models coming up that allow you to have some kind of hybrid between renting and buying a home. And that's a really interesting category as well.
And so moving on to cars and mobility. So we've heard a lot of things about that sector, that people are no longer buying cars, that the move is towards cleaner cities, new ways of moving around. What are the emerging models in that space?
So in mobility, I put at the top Auto One, but you have, mobility is a lot of things at the same time. So you have this kind of sell now model, Auto One. Nesper's also invested in a business called Frontier Car Group here in, I think they're based in Berlin. Actually the unit economics of this model are not yet completely clear. And it could be that this model could be replicated by, let's say, dealer networks, for example. But Auto One Group is already worth 3 billion. They have SoftBank behind them, and it's the same story as what I said before with Opendoor. In theory, it could become a company like that could be worth as much as Uber if they manage to become kind of the global marketplace. Then you have new ownership models. I think that's really interesting, and I heard that there are several VC rounds happening at the moment. Actually, a lot of these companies are raising money. So Fair is the US example, but you have Drover, Cluno in Europe that enable you to basically, it's like a Netflix of cars. So you It's you just pay a subscription fee. It's your car, but you don't have to worry about any of the trouble of owning it. And you see companies like Daimler, Volkswagen, and even BP, the oil company, making investments in this space. So that has to do with owning a car, and then you have in the mobility space, you can kind of divide it in three categories. So micro-mobility, short distance, which is the most frequent, medium and long distance. Now this one has already been disrupted by Uber. It had the kind of side effect that cities have become even more congested because people are also using nowadays cars. So they're getting an Uber for really short distance travel where previously they were walking. So that's not good for the city. But now they started to invest in a lot of micro-mobility startups. And at the moment in Europe, I even lost count how many there are. And we were talking about it a bit earlier. It's probably going to be a market where you're going to see some consolidation because there are a lot of players out there. But ultimately, it can become also a really profitable business.
Okay. So I'm being told we have 5 minutes left. But let's talk about funding, because it's clear that what we're seeing now are like what we've just been addressing for the past minutes, related to very structural trends, structural behaviors. We want things to be frictionless, to be fast and easy. But none of that would have been possible either without a very favorable macro context and a lot of money flowing in. So could you give us a picture about the various stakeholders, fund-wise?
Right. Yeah, so that's right. So actually all these businesses need heavy investment and they need a lot of capital. Luckily, it's there. So there are several players in the market that are willing to make these long-term bets. And you kind of, broadly speaking, have three categories. So venture capital has traditionally been in this market, and they keep raising bigger and bigger funds and willing to make bigger and bigger bets on successful companies. Then you see also private equity moving into this space. So traditionally they were more doing buyouts in mature spaces, but it's getting hard to get good returns there. So they also are starting to invest more and more in venture capital rounds. And lastly, corporates, especially here in Germany. So German corporates like Axel Springer, Daimler, Volkswagen, BMW, very actively investing in mobility, especially, but across all these categories actually. German corporates are the most active VC investors in Europe actually. They invest as much as UK and French corporates combined. A lot of Asian corporates, and at the moment this is at a record level. So the percentage of capital that's coming from corporates is now 25%, which is an all-time high. Okay, so I hope we've given you like a good overview of the marketplace space and various players at stake. I think we should open up for questions if there are any. If not, I have more.
If there are, there's one.
Hi there. So with regards to mobility, how do you feel about valuations these days? I mean, they are, by the roof, increasing every single round. Do you think this is just a race to keep raising money? How do you feel about it? Thank you.
So I think it's really easy to be skeptical about these kind of valuations, and I see a lot of people being skeptical about the valuation of Uber, but most of us haven't really seen all the metrics. So I'm really curious to see, for example, once Uber goes public, then you'll be able to see really well what does unit economics look like. They have a super high frequency, very loyal customer base, and then you really know. And yeah, I think it would be naive to think that these investors are naive, because most of them are not. They're actually quite sophisticated. A lot of institutional investors have backed companies like Zalando. You know, they've been educated by Rocket Internet and been taught to think like that. So that's, you know, I think we have to kind of see more the underlying metrics before we can have a strong opinion about it. Of course, on the other hand, yeah, sometimes investors, they get over exuberant, and that has also happened in the past. But I'm tempted to think that people actually know know what they are doing. So.
About finance and real estate, I'm missing the lending marketplaces. Or
Yeah.
could you add something on this topic? Because they are already also IPO'd, so you have perhaps a little bit more data.
Exactly, yeah, and Schibsted invested in Lendo, which is kind of an under the radar unicorn as well. So we will get into this in the report. But is there anything specific that you want to?
Yeah, especially the US. So Lending Club, SoFi, this kind of, because they're huge.
Yeah.
Huge volumes and enough data.
Okay. Not enough data about the lender, you mean, or?
Let's say if one of those slides there was the real estate,
Yeah.
and you had the finance, and the finance there was the, let's say, the N26 and the Revolut, etc.
Yeah.
Where probably everybody's very curious about the numbers, or if they're earning money or not.
Yeah.
But let's say in the whole combination of finance and real estate, let's say the lending or mortgage and this kind of, let's say, big players like Lending Club in the US, there are big volumes. So and they also got a lot of funding and have perhaps also bigger chances to survive or move into other directions.
Yeah. Yeah. So what I have seen is that the peer-to-peer model didn't really take off, and that most of them are actually just taking institutional capital. So they're almost like a front for the old institutions. But yeah, there's still huge opportunities there. Yeah, I put. You're right that I put more the kind of challenger banks, but also in the lending. In lending, there's still a huge market, and we will kind of address that in the report.
How do you think in future classical marketplace like Uber and Amazon can be disrupted? For example, with blockchain technology, Uber can be disrupted.
Yeah. So that's what the trend that we show in the beginning is kind of the opposite of blockchain in a way. Like it's more centralization rather than decentralization. It's like more control. So yeah, what consumers want is they don't want any friction. And at the moment, blockchain creates a lot of friction actually. So maybe, in the future, but it's not actually, at least the story that I was telling, that has not been the direction things have been going.
Thanks.
Yeah.
Thanks. So yeah, you already mentioned that this new kind of types of marketplaces that take over more or integrate deeper in the value chain also require way more capital to set them up. So how do you think will this change the type of founders? So do you think, a company like Open Door is like pretty hard to found like out of your dorm room, let's say during university, because you just need like significant investment up front. So do you think that we will see like a different kind of founders, like in, for example, the scooter space in Europe right now, where we have T-Mobility or GoFlash with like very experienced serial entrepreneurs? Or do you think that like venture capital funds will be willing to take more risk and like basically invest more in like pre-seed or seed rounds?
Well, yeah, so I mean, partly, yeah, there will be a different type of founder. But there's also a company, for example, like Goat, that does sneakers. Yeah, and this can be done in theory from your dorm room. So even this fully integrated model, as long as you pick the right niche, it can still be done from the dorm room.
I was kind of controversial question actually, based on that last step, the supply side. Do you think that these models are moving away from kind of platform businesses and marketplaces to more like supermarkets, and potentially, you know, like a supermarket where they run the whole supply side and you can purchase goods there, but you're not really, it can maybe almost destroys the dream of like a platform connecting buyers and sellers potentially. I don't know what your thoughts are on that.
Yeah, so for example, Deliveroo is building their own kitchens, and the Glovo as well. And from what I understand, Glovo is also going to build their own supermarket. So yeah, it's kind of going full circle in a way. Is that what you meant? Or? Yeah. Yeah, in the sense they're taking inventory, but it can go different ways. So some of them are like Coded actually is buying the real estate, but they're also not keeping it on their own balance sheet because they have other investors to do that for them. So there are different ways to go about doing that.
Hi, thanks. Do you see any potential in marketplaces working together and making like super marketplaces, making, for instance, Uber connecting with Airbnb so you can get your home ride in like something like WeChat-ish, but that just huge marketplaces being so dominant that they start like merging into something huge?
In China, you see that a little bit. So they still have kind of conglomerates operating, doing lots of different things. Also, when you look at the frequencies, if you're in the handyman wellness category, it could make sense. Someone else just said that, and I thought that makes sense. To bundle them, so you kind of solve the frequency problem. So if you kind of bundle all the low frequency categories.
Okay, it seems that we don't have any questions, so let's give a big hand to Florence and Yoram.
Thanks.